Hi guys, so I just want to add on to what we spoke about earlier on with our trade entries and how we are defining our stop losses and our take profits. So I mentioned it at the end of the previous video, but just to go into it in a little bit more detail, this again just expands on all the rules that we already know. So is there a strong high or a weak high, a strong low or a weak low? And along with it basically giving us our definitions of our entries, that allows us to have confidence where we are putting our stop loss placement. So we took this trade earlier on where the short was. We had our change of character from this low, and that was quite simply change of character, pull back into the order block for our entry, and we hit our entry. Let's just say we take it here. Our stop loss goes above the high that did its job, and that's really specifically where it needs to be. Then with our multi-time frame analysis, we're looking to see where our take profit is going to be. Oh, so we could say, well, let's look at the next low as our target for a 2 to 1, or we can drop up a level and say, well, is everything in alignment with what we're trying to do here, and is this low going to be our target in this case or whatnot? So um, what we're looking at always is the work of what has actually done its job. If I was short on this high here, if I was long off of this low here, so say again, just as a rough example, market broke structure here. Why am I on a 2 hour chart? That doesn't make sense. Um, so say this low, high, there's a change of character here. And let's just say I took an aggressive trade and I took a long off the close of this candle. Jesus Christ, where's that going? And my stop was below the strong low that did its job on a 1 hour, for example. Now these are reaching all-time highs, so I would never have a clear indication of where my stop would be. But say made a higher high, failed to make a lower low, my stop would then be moved below this low because that did its job. I could take the high, fail to make a lower low, my stop loss goes below that. So it just manages it the whole way up. Again, it does its job. Stop loss goes below here, it does its job. Stop loss goes below here, it does its job. And then eventually I would have got taken out on this low. So that would have been a 4 to 1 if I was just doing a wild trade. So you need to basically make sure that you're consistently able to identify your strong highs and your strong lows. They will always be your stop loss levels, regardless of what you think is going to happen. And you can only move your stop losses to the next level once those highs and lows have done their job. Once they've completed their task, then you could then move it on to the next level to make sure you're confident in sticking within your trade. Um, in a scenario, for example, where a high or a low fails to do its job. Let me just see if I can find something here as a good example for you. Um, so, say for some reason I decided I was going long here, and my target was this high here, and price starts moving in this direction. Um, and I see that in this scenario, let me just zoom in here. This scenario, we made a high, we failed to make a lower low, and then this high then fails to make a higher high. My stop loss would be up at this low instantly because I know this is weak. I know it's probably going to get ran. If it comes to a case where I'm wrong, at least I'm taking profit. And then if it pulls back down, I think it's going higher, I can then look for another entry. But I don't want to lose the work that I've put in and the effort that I've put in. Sometimes it'll be right, sometimes it'll be wrong. You'll always come away with profit regardless of if you're doing that, or if you feel better that you just want to move it to break even. If you feel confident based off the structure, you can move your stop loss to break even to avoid losses. Because it really boils down to your risk management. Regardless of all the information that you have in here, and regardless of how skilled you are at identifying levels and taking profits, You need to be confident in how you manage your trades, and basically when you see something wrong that is not fitting into the alignment of your trade, you need to know that you're able to close it confidently based off the knowledge and the skill that you have. Just allowing stuff to run because you want it to push further is not a solid foundation for trading. That's going to lead to more losses than you want in the future. And the more losses that you take, or the break evens that you take, um, over time, that's going to mess with your confidence and your own ability, and that's going to lead to you creating more mistakes in the future. So, cut the emotion out of the trading. Use the process to define what you're going to do next. I don't want to go, oh, my feelings are telling me, or I think it's going to do this, or I hope it's going to do this. That's never going to be beneficial to how you trade. So you really want to make sure that everything is systematic, everything has a rule behind it, and if the stock market isn't playing to the rules that you've set, you're out of the trade. You take your money, you take your break even, or you take your loss, and that's just the way it is. Once you've defined the stop loss, don't ever move it lower to allow the market to have more room. You, if your stop loss is there, you keep your stop loss at that point. Even if you lose the trade, you do not want to lose more. You will put yourself into negative equity, and you will your stress, your anxiety, and your skill will be diminished because of that as well. So always trust your system. Use your strong lows and highs as your stop losses. Find your valid take profits and what the probabilities are in your favor, and stick to them. One thing I do is when I enter a trade, I try to set and forget. I'll add my my alerts on different levels. So say again, if I had to be in short here, I would have an alert at that key level, and then I could look back over and see, is there any lows here? There's another low here, so I could set an alert at that level and say, right, it's breaking and closing below that. Then I'd set an alert at this level, and so on. I try not to look at it, because every individual tick is going to mess with your mind. You'll say, oh, it's reversing, it's pulling back a little bit, and all these things, blah blah blah. Just let the trade run. If your process is solid and you're confident in what you're doing, don't watch every tick. It's going to drive you mental, and it's going to make you start second guessing everything you're doing. Set the alerts, take your entries, walk away, go for a walk, enjoy life a little bit. Yeah, majority of the trades are going to win. So as long as your risk is solid, you have nothing to worry about in those scenarios. Hope that makes sense, and if you have any questions, just send them over.